Welcome back. Tough trading conditions in South Africa have weighed on Barloworld's local units and further ate into earnings. In the interim period, the group reported an 8% decline in HEPS from continuing operations, and revenue fell by a similar margin to 19.2 billion rand. Joining me as we take stock of the 6 months that was is company CEO Dominic Sewela. Thank you so much for your time, Dominic. Let's actually start with that South African, the South African operations. What level of pain did that business inflict on the group's performance, and was it across the board?
I guess mainly the two divisions, that gets impacted in this particular instance. You're talking about equipment Southern Africa and ingrain. But starting with equipment Southern Africa, I think things needs to be looked at, within context. Last year we delivered historical results. So when you look at that 10% revenue drop, it could have been worse, had we not have the, aftermarket business. Because if you look at our machine sales drop is about 25% on equipment. It's largely because of the customers that we serve being more on the mining side. And as you know, in South Africa, all the mining stocks are impacted because of commodity prices, number one. But on the other side, our consumer business, which is ingrain, has been impacted by two things: external factors, inflationary pressures, consumer confidence. But more importantly, when we acquired the business, we didn't know that the business, is under-invested from a capex point of view. So we are spending money to improve efficiency in that business. But more importantly, we've also had Section 189 where we reduced the cost. But I'm pleased to say that initially we thought we'd retrench about 200 people, and we saved 91 jobs in that particular instance. And I'm comfortable to say this is, the area where, we'll see a lot of improvement. But overall, cyclicality is something that we're used to. We're lucky that we operate in diverse geographies, like Mongolia, Russia, and Southern Africa. We operate in about 11 countries.
All right. Well, just talking about that diversity and still on the subject of pain, I did see a drop in profits in your VT business in Russia, but actually the profit margins actually widened. Talk to us about those dynamics.
Yeah, I guess if you look at, because, whenever you talk about margin, is relative to top line.
Yeah.
But the top line in Russia, because you're not selling equipment, is dropping. However, you are realizing sales in the aftermarket, and the aftermarket tend to have better margins. So from a profitability point of view, Russia is performing better than I expected, because the guidance I gave to the market some 2 years ago when the war started, I was saying if we broke even in that environment, we would have done well. But I must say the team on the ground, is doing the level best. But also sanctions are about compliance, because, your addressable market gets impacted as customers get sanctions. So the spread, of your customer gets to be shrinking all the time. But notwithstanding, we've been addressing attrition in that business. Fortunately, there's been natural attrition, but we had to let people go, because fundamentally we say, how long can we stay? And I hope and pray that there is a positive resolution to the war in that part of the region.
All right. Well,
and that's why you saw that, yeah.
All right. Well, you did get financial relief from your Mongolia business. What kind of, how much juice did you get out of that during this period, and how much more juice do you expect? How much more upside do you expect in the short to medium term?
I think when you look at that business, medium to long term, it's a China story. A lot of people talk about electric vehicles being produced out of China, but they miss the fact that from an energy transition and the size of China, it's going to take a while for China to be able to say they have got sustainable, clean energy. They continue to build coal-fired power stations, and it's not one, it's a lot of those. And those coal-fired power stations require coal. And Mongolia being closer to China, there's a lot of, coal heading that way. And we're seeing expansion in terms of, in that part of the globe. Most of it is going to China. The government of Mongolia have invested heavily in infrastructure that promotes, exports to that market. However, we took pain 2 years ago when the border between China was closed, but we're getting the benefit. I think if we were following cycles, you could easily say if the cycle were to stay this way, the rate of growth would not be as high, but we would be able to remain positive in that area in terms of returns and basically profitability
All
for the
right.
next 2 to 3 years.
All right. Well, even with the headwinds, you still managed to pay down debt. What would you say? Would you say that your debt levels at this point are at a comfortable level?
Yeah, I guess there is room, to pay some more debt. But I guess for us, we focus on the gross debt and payables, because some of our payables, do attract interest, and they attract US dollar linked interest, because these are related to the floor plan. But when you look at our working capital down 48%, it signifies that as we unwind that inventory, we'll be releasing capital that will make sure that we pay debt. But you don't see the benefit of it in the short term. But in the second half, you're likely to see it. And we hope that by that time, we also see interest rates coming down in Southern Africa.
Well, Dominic, I'm sure a question that you are expecting, that cautionary announcement, it's come out now twice, where there aren't any details on that. Nothing has been disclosed yet. Any insight that you can give us in terms of the kind of value that you are trying to create on the potential deal?
Everybody has been asking me that question. And I say, if I was any wiser, I wouldn't have issued, that type of a cautionary, because discussions are in place. And I continue to say to my shareholders, please trade cautiously at the right time. Once the discussions has progressed and there's information, we'll release it accordingly to the market.
All right. Well, I mean, just something also that, I've seen that, Barloworld has mentioned is that you continue to scout for opportunities in terms of organic and inorganic growth. And I'm wondering, in terms of obviously now paying down your debt, does that maybe create more room so that you can continue on those conversations for inorganic growth? And actually, how prevalent are those conversations on inorganic growth?
I think in terms of inorganic growth, you're talking to people all the time. Because there are certain opportunities that you're seeking. There are those that are coming to you, whether you want them or not, and you review them. What you don't want is your M&A team to be sitting on their hands on one side. But I think a lot of people don't quite understand that organic growth is the most value accretive growth you can get, because you're not likely to overpay for it. But if you invest in making sure that you can grow market share, you can improve, your margins, that's the most accretive growth you can get. Because sometimes when you focus purely on inorganic growth in and of itself, price discipline is important, because if you don't appreciate that, because the returns are determined by the price you pay. So we don't, in our capital allocation strategy, we don't say we specifically focus on one. It says which of those is going to be creating value to shareholders, and that's the focus.
All right. Well, thank you so much for your time and for your insights, and hoping we'll be hearing more about that cautionary announcement soon. Thank you so much for your time, Dominic. That was CEO of Barloworld, Dominic Sewela.